By the end of the conversation that we have, I really want to make sure that people are better educated on the reverse mortgage. And I want to get rid of some of the myths or some of the misnomers of the reverse mortgage, because I think it's very important for a lot of people. Because many times what I found is that those folks can be the driving decider on whether or not the homeowner actually ends up with a reverse mortgage.
Yeah, true. So I joke with people, I'm not an expert on anything except maybe reverse mortgages, right?
I'm really excited that we have a chance to talk today. You're such an expert in your field of reverse mortgages. And so I wanted to talk to you about that, because when I hear you speak in conversations with you, I know that there's no question you know reverse mortgages better than just about anybody else that I've ever spoken with. Let's talk about what the reverse mortgage is. And one thing too is that let's talk about who's eligible for the reverse mortgage and the eligibility requirements. That's a good place to start with it. And then we can kind of dive into the misnomers of it and a certain amount of types of people who actually might be interested or might benefit from it.
Too few people find out about this program, and it would be utilized so much more. And it would be so much helpful if more people just took the time to find out about it. It is shocking what happens to people when they spend a few minutes finding out about the program. In California, we're talking about adding hundreds of thousands of dollars of tax-free funds to your retirement plan. I've been insecure about retirement like my entire life, especially the last 20 years I've been doing reverse mortgages, and I see what's happening out there. Many Californians are not ready for retirement. It's expensive, medical. Now we got inflation. But what we do have is we have high home values, and we have access to these funds if homeowners would take the opportunity to find out about reverse mortgages. And most of the time, I've seen it 1,000 times. When they find out 5 minutes about the reverse mortgage, they change their mind. That must have happened to you at some point in the last 20 years. So one of the things that it makes a huge difference for me now, and why I'm not as insecure around my retirement, is I know that I have a reverse mortgage in my future that's going to probably contribute $1 million of tax-free funds to my retirement. So that gives me a lot of relief. And I wish more people would find out so they could have that relief. The program. So it's a government program. It's actually the Federal Housing Administration. And they did a pilot program in the 80s under the Reagan administration, and it worked. They liked the results. FHA, Federal Housing Administration, AARP, they teamed up with lenders and they created this program, and it's been in existence since. So it's a way to access some of the equity in your home to use for whatever purpose you need to use it. And you have to be old enough. So at least one homeowner has to be 62, and you keep title on your home. It's tax-free funds that we provide. All the equity, all the appreciation belongs to the homeowner. When you're done with the house, that equity would belong to you or your heirs. And so one of the really popular misconceptions is you give up title to the home, or you give up the equity to your home. And none of that is true. And most of the reverse mortgages that have resolved that I've been involved with, so almost 20 years doing reverse mortgage, I've had a lot of reverse mortgage loans mature now, right? People have died or they've moved. And in almost all of those cases, the amount of equity in the home is remarkable. So the homeowners are keeping that equity and going on to their next living arrangement. Or if they've died, the heirs are getting remarkable amount of equity from their home.
Let's talk about that real quick. So let's say that somebody has a reverse mortgage and they do get to the point where they pass and their heirs now inherit the home. And with the heirs inheriting the home, how does somebody, is it different with a reverse mortgage that, let's say that somebody has a $300,000 mortgage on the home or a reverse mortgage, and let's say it's the same amount. Is it different if it's a reverse mortgage or if it is a regular mortgage?
So no difference. Whether it's a mortgage or a reverse mortgage, it's going to be treated the exact same way. If I use a conservative average home value down there of $1 million, and there's a $300,000 mortgage or a $300,000 reverse mortgage, that home sells, that $300,000 gets paid off. And the family member, the homeowner, they're going to keep the difference between that $1 million home and that $300,000 mortgage or reverse mortgage. And that's their equity. That's their home sale proceeds, net to them.
Okay. And so that's when the heirs get the home and they sell it. What happens if somebody gets into the home or gets into the reverse mortgage at 62, and then at the age of 72, they decide that they want to downsize?
So that happens. You and I, we have specific experience around this. One of the ways I met you years ago, you had a homeowner that wasn't in the right spot, and we connected and we did some good work for her. We got her out of her more expensive home. I think she was in San Mateo, I want to say. And she moved to a less expensive area. She bought down. She created some retirement funds for herself. We used a reverse mortgage to help her get into that house. and she was way better funded for her retirement as a result of our work together. She wasn't in the right house. She needed some of the equity in her home. She still needed the reverse mortgage for a different home. Her home was just as nice. It just wasn't as it's an expensive area. So you could do multiple reverse mortgages, and there have been a handful of occasions or more where we've had somebody in a reverse mortgage for a period of years. It's not the right home for them. They sell, they get into a different home, and they can do another reverse mortgage on a different.
The biggest thing about somebody who's in a scenario where they can sell a home and purchase into a reverse mortgage, what are the requirements that they have? Because one thing that's very interesting about that one is that credit was not a necessary requirement.
So reverse mortgages are easy to qualify for. Guess what the required payment amount is on a reverse mortgage?
What's that?
Does that look like a zero? No payment. So, we underwrite these loans. All responsible lending involves a level of looking at credit, your payment history, income, and we do all of that. But a lot of people that can't qualify for a regular mortgage, they may have an easy time qualifying for a reverse mortgage because that payment obligation goes away. You're right. Maybe some credit challenges in some cases, maybe hers, but we overcame those because we had no payment requirement. And there was actually some reverse mortgage proceeds that were helping her from an income standpoint. We can use the reverse mortgage benefit to help you qualify from an income perspective. So it's like 98% of the time where our homeowners qualify for reverse mortgage despite their credit and despite their lack of income. And it sure helps that we're maybe not as credit sensitive. There are some things we can do that solve that. So we're often a great solution for homeowners that maybe income or credit challenged with conventional mortgages.
Okay. And so the payment requirement is zero. There is a requirement for them to meet a specific threshold, though.
And it's a low bar, and without getting too technical, if you're a couple, it's $600 or $1,100 a month if you're a couple, and it's $600 if you're a single person, above and beyond whenever your minimum payments on your credit report. And so we have a high percentage of people meet that threshold. It's very rare that we don't. And we have a few tricks up our sleeve that help us meet some of these credit income requirements. A big one is that reverse mortgage proceed. A lot of times we can have $100,000, $200,000, $300,000 reverse mortgage benefit. That goes a long ways towards meeting that income.
Absolutely. So at the time it was a different proposition. Now we have Prop 19. So one thing if you put that together, so Prop 13 is one of the hugest benefits that we have in California. Prop 13, it allows people to keep their tax base. Prop 13 keeps our tax base low for the properties. And as you mentioned earlier, in California, not a lot of people really have all of the funds available to retire, but we do have huge amounts of equity available in our homes many times. And so that Prop 13, when we purchase something different at the age of, I believe it's actually a little younger than 62, but we can purchase another home inside of Prop 19 anywhere in California. And that recently passed just a couple of years ago. People can purchase at a specific age in retirement, and then they can move to the next property and keep their tax base, because that was one huge thing for a lot of people, specifically for that seller. We had to find the right county. At the time, Prop 19 didn't actually exist. So we had to find the next county that will allow their tax base to stay the same. And now the beautiful thing about Prop 19 is that it allows people to move more than once even and keep their tax base on, let's say if they purchased back in the 70s and their tax base on that home is $500 a year, it's going to let them stay inside that budget so that they can purchase the next home. And now you have a bunch of equity that you get to live on as well. So it's a huge win. So that is the reverse mortgage purchase. And then the reverse mortgage itself, do you see that many people do the refinance versus the reverse mortgage purchase?
Most of the reverse mortgage transactions that are done, like system-wide throughout the country, are refinances, people in their existing home. A small percentage, maybe 5%, are purchases, but the purchases are incredible. They're both great opportunities. The program is very much the same either way. The way it's used is very different, but it's still, we make available to you a percentage of your home value based off of your age and current rate. And you can buy a home with that, or if you're staying in your existing home, we're going to create some of that equity is going to be made available to you. And you would use that to pay off a mortgage, if you have a mortgage, and then to fund your retirement lifestyle. I work with a lot of financial planner types like CFPs, and they use this fancy computer software, Money Guide Pro or eMoney, and they're looking at everything that these older homeowners want to achieve, funding their retirement goals. And most people are in this, if it's a tachometer, it's 40 or 50 or 60% of funding all retirement goals. When they add reverse mortgage proceeds, all of a sudden, everything changes. And now they're at 90 or 100% of funding all of those retirement goals. I had a remarkable meeting with a woman a couple of days ago, and I actually have my notes right here where I listed out all of her retirement goals. And one of them, a few of them, stay out of the care facility. She wanted to age at home. She was 72. She wanted a inheritance for her daughter. She wanted to make sure that she had something for her daughter. She wanted to improve her lifestyle. When I showed up, she turned up the thermostat to warm up the house a little bit. Her income is such that she was spending more than she makes.
Okay.
And she's in this $1 million home that's free and clear. And she's got friends in Boston and in Oregon that she wanted to go see. So she wasn't doing any of this because her IRA account was too modest to feel like it would sustain her through her lifetime. We met twice. And, you know, I'm big on education. Clearly you are. We had 2 different meetings. I have law meetings, people's homes, my office. I want to find out what they have in mind. I want to see if I can help, see if the reverse mortgage will make a difference. And for this woman at the end of our second meeting, she couldn't wait. Because all of things were going to happen for her, right? She was going to travel. She's going to turn up her thermostat. She saw that based on the numbers, she would still have a generous inheritance for her daughter because of the way the home values go and that loan balance. She'd have a lot of equity at the end of her life, presumably, that her daughter would be well taken care of. So all these things that we checked off for her, she can't wait for us to wrap up our work.
That's wonderful. It's really incredible too that she went into that interview, or she went into the conversation with you looking for education on how this might work for her, and coming out of it on the back end is really excited about how it's going to work for her and pass on to her daughter and check those goals off and help her create a nest egg as well as enjoy life now while she's living it, instead of just sacrificing everything and waiting. So many people unfortunately do just wait once they get to a certain age, and they're just not sure when it's going to end. It's a horrible way to think about it, but I've spoken with a lot of seniors who really get into that position.
Yeah, so you and I know. I know you well enough. You want the best for people, and particularly our older homeowners. And so if I'm really transparent here, she could have continued to struggle and not travel, kept that thermostat turned down to 67 degrees or something too cold, and her daughter would have been a beneficiary of that, right? Her daughter might have inherited $1.5 million in 15 or 20 years when her mom died. But instead, she made this decision that that inheritance for her daughter might be a little bit less, by a few $100,000. Maybe her daughter only get $1 million of inheritance from the combination of her home and other assets. But she was okay with that because now she was going to travel. And we created one of the big goals was to age at home. We created a huge nest egg that was going to allow her to do that. And so the relief that she had just from the idea of this, and I know how this plays out. I've done over 1,000 reverse mortgages now, and I stay in contact with my clients. I want to be helpful to them. You really get to know them. You have a relationship. I'm sure it's the same for you with so many of your clients. So they know to call me years later, months later, and it's always the same. I ask them, how's it going? And they are so happy and they are so relieved because of the difference that this made. And so when I talk to her years from now, I'm going to find out about her travels. I'm going to find out that she loves how her nest egg is intact, so she knows that she can just age in place at home. We'll look at her home value versus her loan balance, and she'll appreciate that there is so much equity there for her daughter. It is very gratifying work right away with these people. And then 10, 20 years later, when you're reviewing their situation and they've had this life. One of my favorite financial planners, I love the story he tells about, when you're in your 60s, those are your go-go years, right?
Yeah.
And then when you're in your 70s, those are your slow-go years. And then when you're in your 80s, yeah, those are the no-go years, right? This woman is in remarkable shape. The couple hours I spent with her, she's jumping up and down out of the chair she's sitting in. She's 72. She's still in the go-go years, but she was limited by her finances. So the next couple months, I expect to hear from her. She's bouncing around, seeing friends all over the country. You talk about people not making a decision or maybe being paralyzed with what to do. They make a decision to do nothing and they're missing out. She made a different decision and she's on the go here real soon. And I can't wait to hear about it.
And that's wonderful too, because you're really helping. So somebody who takes advantage of the reverse mortgage, it puts them from that position of they're really landlocked, so to speak, and they can't do the things that they really want to do. And once they learn about it, and if they make the decision to move forward with it, it allows them to then start to do the things in the travel that they want to do. And like you said, 60s are your go-go years. I love that. 60s are your go-go years. 70s are your slow-go years, and 80s are your no-go years. But if you're in your 70s and you're still go, you might not have the income that you had in your 60s. And as life progresses, things do just naturally slow you down. But that's the best time to go on cruises. That's the best time to really soak in what's around you. And I think there's so many people who cannot take advantage because they don't realize they can take advantage.
That's right.
And so I think it's an incredible blessing that these programs are there. And it's interesting that they've been around since the 80s.
There's some things that bother us, to keep us up at night. All of us, different things.
Oh, yeah.
Some of these things we can't control.
A lot of times it's money.
Yeah, a lot of times it's money. And for homeowners that have a lot of equity and that are 62 or older, and for her, that was a worry we took away from her. And I don't know what percentage of her worries was money. And to know that we were able to take that worry away from her, it was a huge deal. I don't want people awake at night talking about their problem. I can't do anything about that unless they're old enough and they have equity in their house and they want to take care of the financial part, because they seriously look at a reverse mortgage and make a decision, and then be a part of taking that worry away from them. That makes me very happy.
It's incredible. And I know for a fact that you do care a lot about the folks that you work with. You're a relationship-based person who cares about the education of the clients. And it's so important because it's very easy in our business to become very transactional. And if we focus more on the relationship, it tends to make it a little bit slower for us. However, it makes it much deeper, is what I find. And that's one of the things I admire about you, is that you're very relationship-based.
Thank you. I love talking about reverse mortgages. But I've been talking about reverse mortgages now for 18 or 19 years. So my favorite meetings, and the way all my meetings start, is we'll talk for half an hour or more about anything but reverse mortgages. And because I'm always talking about reverse mortgages, listening to somebody talk about their life and their experiences and their aspirations, their kids, their pets, where they've been, what they've done, that's way more interesting to me. I like people's personal histories, and it helps me set up a reverse mortgage for them, or talk about setting up a reverse mortgage for them. It probably works better because I know enough about them. I feel so blessed to enjoy and appreciate these people's stories as part of my work.
And working with seniors, there's a specific joy that I find working with seniors as well, because they have, my experience, they have a lot of experience, they have a lot of stories, and they're a lot of fun to work with because they usually are very focused on what they want to do. They know what they want to do next, and they tend to be very focused, and they're very fun to work with because of that focus, I find. And the stories do mean a lot more, I feel, when you're in your 70s and possibly 80s than the less experience of somebody who's in maybe their 30s or 40s or maybe 50s, right? But I think overall, seniors are amazing to work with, and it's really nice to be able to be there for them and to help them out.
They're very interesting. There's so many things that I enjoy about it, sitting there.
So I think that it's really the learning process, and then being able to educate them on things that they otherwise don't know. That's really a huge part of it. And I think I totally agree. I'm glad you guys won a trip, because you guys, any experience I've had with you and your team has always been a positive experience. And I think it's fantastic.
You've touched on this a little bit. We do work with, of course, 30, 40, 50-year-olds as a part of making the decision, helping mom and dad make the decision. Yeah.
Yes.
We want that family involvement if it's appropriate for our homeowner. Half the time, mom and dad are like, no, we got this.
Not necessary.
We'll tell them on our own time. And then the other half of the time, they're like, we'd like our kids involved. It's a personal preference. And I want all potential advisors, financial advisors, advisors that are kids or heirs or experts, bring them in, right? The program is so helpful. I want trusted advisors in the mix.
Absolutely.
So that they can help make the right decision for the people they care about.
Absolutely, 100%. And I couldn't agree more. I think that anytime I've seen an advisor go into a reverse mortgage scenario with somebody, they always come out with wanting that person to do it because it gives them a bigger nest egg. An advisor's position is to help that person in retirement many times. And in helping them in retirement, it's going to give them, if it gives them a bigger nest egg at the end of it, or lowers their liability, then it's ultimately going to help them in the long run. And we have a history now of longer living. And with that longer living, we tend to run out at the end more often.
Yeah, Sam, I have an idea of how old you are. I know how you take care of yourself. You need to plan to make it to 100.
I tell my kids 150, but yeah, you're right. I'm going to be immortal as far as my family's concerned. And you too, Hank, you look fantastic. And it seems like you're always taking care of yourself.
You want to be successful in a lot of areas of your life. I'm not great at all of the areas, but take care of yourself, fitness, and eat good, read and study, and then be good at work.
I think that's one of the ways that we were able to connect, is that we have that connection. And when you guys do the seminars, I think the seminars are fantastic. And if you can give me information, if you guys have a link for upcoming seminars and things like that, we'll put that inside the notes of the interview that we're doing here. We'll do that, put that inside the notes of this YouTube interview.
Got it. We do. And it's the fish market, and we probably have one in June. We love the fish market.
Oh, I love the fish market. Yeah. I haven't been there in a long time.
As we inviting you.
Yeah. I'm looking looking forward to it. So I have 6 misnomers and we've touched base on them, but for the editors, what I want to do real quick is go through the different misnomers. And if we haven't touched base on one of them, I'll go through them real quick and then we'll go back and we'll check them off. So the first misnomer that I have is my heirs will be responsible for repaying the loan. The next one is I'll have nothing left to leave my kids. The third big misnomer is of the reverse mortgage is I won't be able to leave the home to my kids. And the fourth big misnomer or myth of the reverse mortgage or the HECM loan is I can't qualify because my home isn't paid off. Number 5 is I won't be able to sell my home. And number 6 is I hear lots of people default or get foreclosed on in the reverse mortgage or the HECM loans. So out of those 6, I know we've touched on all of them at this point. Let's answer them real quick. The first one, my heirs will be responsible for repaying the loan.
If you have $1.5 million home, value of home, with a $300,000 reverse mortgage, how painful is that going to be? Oh, darn it, the heirs aren't getting 1.5, they're only going to get 1.2 million from that.
Yeah, absolutely. And I think it's very important to add there is that if they had a loan that was $300,000, they would still have to pay that off.
That's right. No difference.
The reverse mortgage and the forward mortgage, there's no difference between the two in paying them off.
That's right. And did your loved one change their life because they were able to live a little bit better? Like I tell my dad, I am not waiting for any inheritance. Please live it. Most adult children are like that. People might be surprised, but kids are really good about wanting mom and dad to enjoy their retirement and use all their resources. Most of the time I see that.
And many times it's just what I find is that many times it's just if they don't, it's just because they don't understand the reverse.
Yeah. And then we meet and then they turn around and like, Mom, Dad, you need to do this.
And that's spectacular. And how freeing is that for the senior as well at that point?
Yeah, and then feel good about their kid who's on board with them, living it up a little bit more.
Absolutely.
Yeah.
The next one is I'll have nothing left to leave my kids. It ties into the first one, but what will you have left to leave the kids?
It would take a housing crisis of epic proportions for that to happen, right? Which isn't, I guess it's not out of the question, but it would mean that housing prices fall apart to an extent of 60 or 70%. I'll leave that to you. Do you see that on the horizon?
No, I definitely don't. I look at the advisors that really speak in the industry and the economic advisors for the overall economy itself. And the biggest difference that we see currently is that we're not going to have another 2008. In fact, things look like right now we're going into the spring market. Inventory is still low. And it seems to me that we're certainly going to have another hot market going into spring. And we're already seeing the multiple offers again. Now, when if you're talking about a 60 to 70% reduction in price value, one thing to remember is that if you take the money out on a reverse mortgage, what happens? And let's say the market does fall apart. What happens at that point?
Yeah, that government involvement makes a huge difference. People love the protection that comes with the reverse mortgage. It's probably the safest lending program out there. So homeowners never have to leave the home, no matter what happens to their home value or their loan balance. You never make a payment. Your available funds are always guaranteed to you, regardless of what happens to your home value or loan balance. And you don't have to pay back a loan if it's more than your home's value. Even in that worst case scenario where there's no equity for the heirs, mom and dad are still protected. Right. And I don't know in the history of our country, we've ever had a housing market pull back like that. The likely, almost certain scenario is so much equity left over for the heirs 5, 10, 20 years after the reverse mortgage is put into place.
The biggest takeaway from that answer that I hear is that even if the market does fall apart, mom and dad are still being taken care of. So in other words, if they were in a position where they were having a hard time to start with and the market fell apart and they didn't take advantage of the reverse mortgage, they would actually be in a much worse position if they didn't have the reverse mortgage than having the reverse mortgage. I think that's a huge takeaway from that answer.
Yep, I got stories on that for a different time.
So the next one, number 3, I won't be able to leave the home to my kids.
So let's go back to that example where it's a $1.5 million home in the future and it's a $300,000 reverse mortgage. Johnny wants the house. He gets his own loan for $300,000 or his own savings, his own resources to cover that $300,000. He pays it off and it's his house, right?
Absolutely.
The lender just wants to be paid back whatever's owed. And there have been a handful of cases where Johnny or Jill are now old enough to get their own reverse mortgage. And they can get a reverse mortgage to take over mom and dad's house if they're 62 or older. You can get a reverse mortgage and assume the house for mom and dad. Your reverse mortgage pays off mom and dad's reverse mortgage.
Absolutely. To add to that is that with the Prop 19, having it as your primary residence, you keep the same tax base as well.
because
now
a huge difference.
Then you're qualifying on that tax base instead of purchasing the home that's 1.5, qualifying for that tax base, which is 1.25%. And most of California, I believe it's 1.25% of the purchase price. And so you're looking at an additional $18,000 on average, $18,000 a year.
Yeah, it's enormous
to actually.
Yeah. Big incentive to buy mom and dad's house or keep mom and dad's house with the tax base like that.
Another one is I can't qualify because my home isn't paid off.
Most of the time, maybe 60% of the time, all through these years, first mortgages that I'm doing for people is because they have a mortgage. The woman I telling the story earlier, she had no mortgage. She just creates a bigger starting nest egg. If you owe $100 or $200 or $300,000, that's okay. We're going to pay that off, and those payments are going to go away. Your starting nest egg, your starting available funds might not be as big because we're using some of that to pay off a mortgage. That payment relief will be a big deal. I wish I could get rid of my mortgage payment.
Yeah, absolutely. And like you said, that payment relief is a huge piece of it because
a lot of times it's enough. Most time it's enough. Oh yeah, just get rid of my payment. I'm all set.
$1,000, $2,000 a month makes a tremendous difference.
Of course.
Especially if somebody's already working from the position that they're working on a limited income, that $1,000 to $2,000 a month is certainly going to help them, the cause across the board. Next one is I won't be able to sell my home.
Sam Spinella will get your home sold. He'll get you the most money. He'll do it fast. If 5-star service. Absolutely. Yeah, it doesn't matter. If you're free and clear or you have a mortgage or you have a reverse mortgage, there's no additional pain involved in selling the house other than what already comes with selling the house. So it will not make a difference. You sell your house anyway, anytime you want, regardless of a reverse mortgage or regular mortgage, free and clear. Yes. So no difference.
Absolutely. And that is a huge misnomer that folks have. And it's you are still owning your home. You are the one on the deed of trust, ultimately. So you still own your home. You just have a loan.
And I should mention this. There are some payment requirements when you have a reverse mortgage. It's proof that you own the house. You're going to pay property taxes. Yes. You're going to pay homeowners insurance. And you're going to pay if you have homeowners association.
Okay. Yes, absolutely. And so those would be part of the qualification that someone has when getting the reverse mortgage, just to make sure that they can pay those. And many times they are in a position where that's not going to be an issue.
That's right.
And the last one that I think is the big of the misnomers or the myths is I hear lots of people default or get foreclosed on these loans.
Yeah, I know very few of those cases. You'd have to not be paying your property taxes period of years, like with a regular mortgage. If I stop paying my property taxes, my lender, my forward mortgage lender, the regular mortgage that I make payments every month, they would step in and start paying taxes because they wouldn't want the county to foreclose on my property and they would be impacted. Yeah. So they would start paying. But at some point after a period of years, if you're not paying your property taxes and you have a loan, reverse mortgage or regular loan, the lender is going to show up and take action. No different with a reverse mortgage. I don't know if I've ever known that to happen with any of my clients. And there's programs to help people if they can't pay their property taxes. I think the state of California or different entities might help older homeowners who can't pay their taxes. You know, hopefully there's some relief coming somewhere from someone. But if you go years and years without paying your taxes or your insurance or even your homeowners association, bad things can happen to you years later. It will have nothing to do with reverse mortgage.
Absolutely. Absolutely. And another question for you is, so as far as where are reverse mortgages available and where are you licensed?
They're available in all 50 states. I specialize in California, particularly Northern California, Bay Area, Sacramento, Southern California. We've got people down there, or I go down, I got a lot of family down there. So we're really all of California, but especially Bay Area, Northern California.
Anybody can reach out to you as well, right? Because you have networks in all 50 states as well. So if somebody is looking for a resource, let's say somebody from Tennessee sees this video and they're looking for a resource, instead of having to find somebody who may not be able to help them as well as somebody you know, they can reach out to you.
If it's California, you're probably working with me and my team. If it's out of state, from having done this for 18 years, and I love the people in the industry and the few different places I've worked, very well connected. I think I could cover people in all 50 states, actually, making sure that they get the right person. It's typically our older homeowners. And you want to meet with people probably face-to-face. So over 90% of my meetings are face-to-face. You want the education component. You want someone that's going to take their time. You want somebody that's striving for the 5-star service. We do that in California with my team. If it's out of state and we can't handle it, we're going to find someone that I probably know personally that can be committed to that same type of experience. So I'd love to help, and I just love helping, talking to anybody, anywhere to get them with the right person so they can get the right information, make a good decision.
I'll have all of your contact information as well. If there is somebody watching and they want to reach out to Hank Rhoads, I'm going to have all of Hank's information available. And so you can give him a call anytime, and we'll have his information in the links of the YouTube channel. And also we'll tag him on social media and things of that nature as well. I think that we're pretty good. What does HECM stand for?
Yeah, so that's the technical term of the program. People know what reverse mortgage. What the heck is HECM, right?
Yeah.
So the technical is home equity conversion mortgage.
Okay.
They need to do something about that name.
Yeah, exactly. Sounds like a
Yeah. So I just go with reverse mortgage. And then some people that they do their homework, they're like, what's this HECM? And so then you have to explain it. So basically the reverse mortgage we've been talking about, the technical name, HECM, home equity conversion mortgage.
Okay, perfect. The HECM does not really flow off the tongue so well.
But it does not.
Awesome. Hey, Hank, thank you so much. I really appreciate it. It was great catching up with you. Great having this conversation with you. And if you are watching this and if you want to reach out to Hank, go ahead and reach out to Hank. I have all of his information available. But Hank, what is the best way that people can reach out to you?
So I'd like to hear from people. Call me, right? My phone number will be on there, 916-849-6447. It's been my number for decades. And I love getting on the phone with people and helping them with anything reverse mortgage.
Thank you so much, Hank. It's been wonderful talking to you on this, and I look forward to working with you on future transactions as well.
Absolutely, Sam. So good to see you. Hope I see you face to face soon.
Yes, absolutely. Thanks, Hank.
Thanks.
Take care.
Bye-bye.